This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's finally Friday. We are coming to you once again from the CNBC TV 18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
Well, market dithering at all-time highs. I guess there's still some more patience that we need as a virtue, right? Which is hard. But I'm sure for the bulls, at some point in time, the all-time highs would come through, whether it's today, next week. You never know.
Well, there's a pause all around, right? Yesterday, because the markets paused, the RBI governor paused as well, and India didn't make any progress in the test match against Australia. So hoping that Friday is far better than Thursday, because yesterday we had expiry that played out for the bears well. You had the RBI governor that hinted some kind of hawkishness, which the street didn't like. And India was dismal by the end of it in the cricket match. So I'm hoping 5 wickets down. Hopefully the tail can wag this time
And next week you have the US FOMC policy, and there as well there could be a pause, right?
Yeah, hopefully. That's what data points are suggesting.
The big event for me is today evening, 6 p.m.
When you go home?
No. The French Open.
French Open.
French Open.
It's the semi-final,
Yeah.
but it's almost like the final. Alcaraz and Djokovic go head-to-head.
Yeah.
So, I mean, that's going to be...
Who are you
quite
gunning for?
something.
Djokovic?
Sure, Alcaraz, I think, The guy, at 20 years old, he's kind of, hitting it out of the park. So, but, Djokovic always seems to find that one more lever whenever he goes up. He ups his game. I mean, I don't know, magically. So it's going to be a tough one, but you never know. 6 p.m., guys.
Okay.
All right, well, let's just quickly take a look at what the market is looking like, right? I mean, so yesterday there was a bit of disappointment. It's a pause, and I think that's the right way to put it. We came off, but we are still holding on with important support levels. Those have not been broken, and I think that's important to emphasize, even as you look at what happened yesterday. We're still above important supports. Now, we don't have very much by way of, big support from the US markets overnight, although markets were higher. But it was once again led by the NASDAQ. I mean, markets ended higher, but largely tech is what contributed to it. So 1% in the NASDAQ, and the tech names there lifted the S&P higher as well by about 0.6% or so. And the NASDAQ went up because yields fell. They were down about 8%. Remember, the previous day NASDAQ was down 2% because yields went up 14 basis points. Yesterday, yields fell 8 basis points. The CBOE WIX now is below 14. It's the lowest since pre-COVID times. It's quite something. I mean, absolutely no fear out there, indicating that, things are going to be pretty solid. And they've been pretty good if you just look at the indices. Now, the dollar index has also come off a little bit. We were talking about 104 point something. We're now at 103.3. So, and by the way, the dollar index held near intraday lows yesterday. So there may be more to go here on the USD. We had one data point. So the US weekly initial jobless claims saw a surprise jump. The number rose by about 250,000. That level is consistent with indications that the labor market perhaps is starting to show first signs of crack. Remember, the headline jobs, the monthly jobs data has been pretty strong, but this showed some surprising rise, which is what is needed. The hikes have all been directed at making the labor market wobble a little bit so that the wage growth is not as fast, etc. But in any case, we have the FOMC meeting only towards the end of last week, and before that we get CPI numbers, which I think holds greater sway in terms of what the Fed may or may not do. Okay, let's come to the market here, right? Now, on the Nifty, as I said, we wobbled a little bit, but we did not kind of sell off completely. Supports are holding. The first level is 18,464. This must hold for the higher top, higher bottom pattern to remain intact. So keep that in mind, 18,464. We left off at 18,634. So it's, goodish, almost 200 points away. By the way, the 20-day moving average also has moved up a little bit. That stands at 18,431. So, this zone of 18,431 to 18,464, I think this is the, important support area. If the market stays above these levels, as I said, the higher top, higher bottom formation is intact. And there's there may be pause, some sideways action, but eventually you're heading higher. For the Bank Nifty, the 20-day moving average comes in at 43,977. The swing low of 43,706 then after that are important. Downside levels, which the Nifty must not close below, must not close under. So we'll see how this one really pans out. We left off almost exactly at the 20-day moving average, by the way. To move higher, this is a level which we've put out over and over again. We must close on the Bank Nifty above 44,500 levels. And that will give you a clearer picture of the market wanting to move higher with some amount of momentum. Last day of the week, there's not very much by way of data points, etc. RBI policies behind us. Will we have another quiet session? Or, will they be, if you get a large dip at some point, will the dip be bought? I would tend towards the latter rather than the former, but we'll see. The SGX is indicating about a 30-odd point higher start, 18,750. Sonia.
I think it's just a matter of time, right, before which the all-time highs get taken out. We are almost there, but not there just yet. The global cues are also positive, so in that context, today could be a good day, a good start actually. But the Nifty failed to hold on to the intraday high yesterday. We've come off quite a bit, and we are at that 18,600 mark, not too far away from the all-time highs of 18,800. Couple of things that I want to mention in addition to what Prashant just spoke about. The Dow and the S&P 500 both had a good session yesterday. In fact, the S&P 500 has now seen its strongest close or highest close for 2023. So it's had a couple of good weeks. It's the fourth straight positive week for the S&P 500, and this is the first time since last August. So it's had a clean streak on the upside, and the Dow is headed for its second consecutive week of gains. So global markets have been solid. That picture has been good, and our own markets have used that as a crutch to sort of move higher. The flows have thinned out a bit actually. DI sold yesterday to the tune of 400 crores, while FI has bought a bit, about 200 odd crores. A couple of stocks that I'm looking at this morning in the banking space. One of them is SBI. There's a board meeting where the board will be considering fundraising via an issuance of debt instruments. So keep an eye out on that. There's also Kotak Mahindra Bank, the Canadian pension fund. CPP is likely to sell about 1.66% stake in the company. That's source-based information. So these are a couple of banks that could be in focus. But otherwise, the market has been dithering at higher levels. Even this morning, the SGX Nifty is indicating a positive start, but largely muted. So let's see how it goes from there.
Well, Sonia, we're getting some disappointing data coming in from the United States, which is good. But the initial jobless claims went up. Earlier in the week, we had the services data that was a little bit disappointing. And the global PMI as well was a little bit disappointing. Coupled with that, you had the factory orders that weren't that good. Now, that's good news from an equity market perspective, right? Because those rate hikes, they seem to be having some kind of impact on the economic data coming out of the United States, though the CPI data will be keenly watched in the next week. What about the cues? Well, the Indian markets, the uptrend is intact. Yesterday, you had a mild pullback from the top, and that's really par for the course. The good news today is Brent crude prices are mildly lower, and the dollar index has cooled off a little bit as well. And we track both those two indicators, so that's pretty good news. But the bigger point that I made yesterday as well is there are mid-cap and small-cap stocks that have done very, very well. Now, if they happen to be part of your portfolio, I think it'll be prudent to at least do some cleansing of your portfolio, because in the last 2.5 months, there have been a lot of stocks that have moved up, and some of them are not fundamentally backed. So just keep an eye on that. Yesterday, after a while, you had the mid-cap and the small-cap indices that underperform. Stick to the names that you want to and cleanse out some of those. So have a relook at your portfolio. The problem yesterday was institutions that have been backing up this market, that's the DI and the FI number together, they turned net sellers. And the FIs, they added some shorts, close to around 10,000 short contracts were added, and they mildly moved back into the short position. So 52% of their positions are on the short side. These shorts in the system are not such a bad thing. You like to see some shorts build up, because if the institutional flows don't pick up, then these shorts will be forced to cover out. So I like a net short market rather than having a net long market. The PCR yesterday we pointed out, it's moved to the upper end of the band. I think this is an important cue. Every time it goes to around 1.4, we see the Nifty pull back a little bit. When it moves to around 0.7 odd, we've seen a bit of a, we see the Nifty see a bit of a bounce. So just keep an eye on that. Now we're bang in the middle. Options data, that seems a bit of a strategy that's playing out. 18,700, that's a crucial mark. Which way do we swing? Well, time will tell. But for the time being, it appears that there's a strategy in place. That's you write the 18,700 call as well as put. A short straddle is what it's known as. You pocket close to around 180 rupees and you deduct 180 rupees from that 18,700 odd mark. So on the downside, 18,520 becomes important. And on the upside, 18,880. So that's the broad range that you're looking at. So, you want to buy closer to around the lower end of the range. For starters, the SGX Nifty is starting in the green. I don't think you should go ahead and rush and buy this mild green. Maybe wait for a bit of a pullback. The uptrend is intact. So watch that 18,520 and look to buy, but only look to buy on the dip.
Okay, look to buy on a dip. All right. Well, another thing that, of course, we need to watch out for is the way the shift is happening in terms of individual stocks, right? This week, all of this week, the focus has been in the broader markets, and so many pockets, right? Whether it's defense, whether it's auto ancillaries, whether it's power stocks have come back in a big way. So that could be the focus area. I know we keep getting fixated about all-time highs, but there's so much money being made in the broader markets.
Well, that's right, Sonia. And talking about power stocks as well, I met a corporate that indirectly is linked to the power sector. And they said that it's not just in India, even globally, we're seeing that push towards renewable energy. And there are various components, whether it's cables, whether it's conductors, that could find some demand. So let's see how this goes. But yes, the headline index, we're fixated whether it hits all-time highs. Plenty of money to be made in the broader markets.
And people are making it, right? All right, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. Markets across the globe. Rana Gupta of Manu Life Investment Management will be joining in to discuss that. Our research team will get you CNBC TV 18's list of top 10 stocks for the day. And 8:30 this morning, we have Ajay Bodke joining in with the fundamental check on things.
All right, on the equities front, first up, we have Lawrence Belanco of CLSA, who says that the Nifty looks set for further price action below 18,360 to 18,980 resistance. But draw your attention to the mid-cap space, as we just pointed out, right? The Nifty mid-cap sector has recently experienced a breakout from its 2021 to 2023 consolidation pattern with momentum confirmation. This suggests an initial upside target of 38,400 and then 42,388. This supports further outperformance by the mid-cap space and dictates an overweight stance.
Okay, we also have a view coming in from Mahesh Nandurkar of Jefferies, who says that financials and IT sector together account for 50% of Nifty and are key for any India portfolio. Past 14 years data shows that both move in the opposite direction. 70% of the time, they believe that there is still a lot of room in the overweight call on banks and underweight call on IT, given the fundamental trends and relative valuations. According to Jefferies, this type of trend usually lasts for 3 quarters, and we are just halfway into it currently. Mahesh adds that they would be sellers into the recent IT rally going forward. By the way, we've got a couple of IT companies joining us today on the program over the next 2 hours.
Oh, absolutely. And, after the discussions that we had last week about a lot of IT companies talking about scaling down or, clients deferring their decisions, there's a lot of concern once again that has popped up in the IT space. So let's see, we'll get more conversations going today. Let's get you some money market views as well. On the rupee, you have Lakshmanan V of Federal Bank, who says that the RBI maintains status quo. The focus now shifts to an action pack next week, where the Fed, ECB and the Bank of Japan are slated to meet for their respective monetary policies. There are high expectations for the Fed to refrain from tightening policy for the first time since January, while the ECB is expected to hike by 25 basis points despite the Eurozone economy slipping into technical recession. The rupee volatility remained quite subdued throughout this week, and the currency is expected to trade in the 82.28 to 82.84 range till the FOMC.
Okay, on bonds, we have Lakshmanan V of Federal Bank, who says that the RBI delivered no surprises in yesterday's MPC. Market will await the FOMC next week to draw fresh directions from the US rates market. He expects the Indian benchmark 10-year yield to continue to trade in a tight range of between 6.95 to 7.05% till the Fed meet at least.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit. But for the time being, let's run you through the list. We're looking at Tata Palm, HAL, Aether Industries, Biocon, NHPC, Capacite Infra, IRB Infra, IRB Invit, and Snowman Logistics. They're stocks on the back of positive news flow. Well, because of that large block that we're looking forward to on Kotak Mahindra Bank, that could be the stock that will be reacting to that.